Imagine you have rupees 10 lakhs cash and suddenly the government takes away almost rupees 8.5 lakhs as tax and penalty. But now in budget 2026, the government says declare yourself and pay only 3.9 lakhs. Sounds unbelievable. But this can actually happen legally. Let us understand the biggest tax reform of budget 2026. Hello everyone, welcome back to our channel. This presentation is brought to you by Synergy Business Advisors Noida, your trusted business Mitra, providing complete advisory solutions. Today I am going to explain voluntary disclosure of unexplained income and the 39% tax window, and decode one of the most powerful and practical reforms of budget 2026. So watch till the end. This video can literally save lakhs of rupees. What is the issue government is trying to solve? India has huge undisclosed incomes, black money, unaccounted cash, unreported investments, Benami transactions. To control all this, the Income Tax Act already has very harsh taxation and penalties. But harsh laws create fear and litigation and hiding, not compliance. So budget 2026 introduced a soft compliance route, that is, encourage people to voluntarily declare hidden income, pay moderate tax, avoid heavy penalties and jail. Let us first clear big myth. Many people think keeping cash at home is illegal. There is a fixed cash limit, but that is not true. Keeping cash is legal, but you must be able to explain where it came from. If you cannot explain, income tax law steps in. Now let us understand the law. Section 68 of the Income Tax Act says unexplained money in bank or accounts. If any amount is found credited in your books or bank account and you cannot explain the nature and source properly, it shall be treated as your deemed income. Section 69 of the Income Tax Act says unexplained investments. If you have made investments which are not recorded in your accounts and you cannot explain the source, the value of such investments will be treated as deemed income. Likewise, Section 69A deals with unexplained cash and jewelry. If any money, jewelry or valuable article is found in your possession and you cannot explain its source, it will be treated as your deemed income. Section 69B deals with extra value found. If the actual investment is higher than what is recorded in books and you cannot explain the extra amount, that excess will be treated as deemed income. Similarly, Section 69C of the Income Tax Act deals with unexplained expenses. If you incur expenses and cannot explain the source of such spending, it will be treated as your deemed income. Now comes the budget 2026 reform, that is voluntary disclosure window. Budget 2026 introduces a quasi-amnesty window, that is, declare unexplained income voluntarily, pay only 39%, no penalty, no prosecution. So the key benefits are flat tax 39%, no penalty, no prosecution under the Income Tax Act. no harassment, no long litigation. Important sections involved: Section 139, filing of return. Disclosure must be voluntary in return filing before department action. When this section is not available, this section cannot be used if search or survey already started, notice already issued by the income tax department, income linked to proceeds of crime under PMLA, Benami Act already triggered, or PMLA already triggered. Once enforcement begins, no benefit will be available under the scheme. Is this full immunity? This is important clarification, very important disclaimer. The voluntary disclosure mechanism provides immunity only under the Income Tax Act 1961. It protects against income tax prosecution and penalty, but does not automatically grant immunity under other applicable laws. Other laws that may still apply depending upon the nature and source of income include GST law, if the income arises from undisclosed business turnover or supply of goods or services, FEMA regulations. In cases involving foreign assets, overseas transactions or cross-border fund movement, Benami transactions, Prohibition Act, where assets are held in fictitious or proxy names, Prevention of Money Laundering Act, that is PMLA, if income is linked to proceeds of crime. Conclusion: while the scheme offers significant relief under income tax law, it does not provide blanket immunity across all regulatory frameworks. Each case must be evaluated independently based on the facts and source of income. Hence, the government's message is loud and clear. It says, declare your income, pay a one-time tax of 39% and get complete relief from penalty and prosecution under the Income Tax Act. But if you choose to conceal and the income is detected, the tax burden can rise to nearly 99%, followed by prolonged litigation, financial strain, and years of legal uncertainty. Another very important warning: this is not a permanent scheme. It is a limited window opportunity. If you miss it, you lose the chance forever. This is CA and IP Praveen Agrawal thanking you for watching. I hope this presentation will be helpful for you. Please subscribe to the channel for more such informative videos. Thank you.